Get ready for the big revival, the real estate revival, that is. Now on 77 WABC, your New York weekend.
Get ready for the big revival.
It's Rand on Real Estate with Greg Rand.
Welcome to the Big Real Estate Revival. My name is Greg Rand, your host on 77 WABC and WABCRadio.com. Got a great show in store for you today. We've got probably the number one real estate entrepreneur in America is going to be with us in the second segment for an interview. And no, I'm not talking about Donald Trump. I'm talking about the number one residential real estate entrepreneur in America, a guy by the name of Dave Liniger. He's the founder and chairman of RE/MAX, and he started that company some 40 years ago, still runs it today, and he's created really the largest real estate company in the planet. Really interesting guy, down-to-earth guy. I think you'll enjoy it. We're going to take calls from all over the country. We've got an audience now from a multitude of cities around the country who have caught wind of the Rand on Real Estate momentum here, and we're going to be giving priority to folks that are calling from outside New York just for the fun of it. We're going to be talking about international investors and how maybe they know something that we're missing because we're too close to the situation. So maybe it'll be something that you'll feel good about to hear people who don't live here who recognize the opportunity of an American recovery that's coming. They have faith in it, more faith than some people in our country have. And so I think you'll find that useful. But as always, we're going to talk about smart people saying dopey things about real estate right up front. All right. This is a segment that I always do because my mission here is for you to become bulletproof, for you to be to tap into your entrepreneurial spirit. And you can't do that if you buy into the nonsense that gets spewed on. I mean, chances are, if you are watching television and somebody is on TV, with the exception of me, of course, you're watching TV, someone's talking about housing, chances are they're saying something wrong. If you're reading an article in a major newspaper, they're talking about housing, chances are they have no experience in the housing market as an investment category, as an asset class. They live in a house. They figure that makes them an expert. And so the reason why I do this is that I want you to be bulletproof. I want you to have Teflon on you because the negativity can sink in if you're not careful. This is a way to make sure that you keep your eye on the ball. And you know what? For the fun of it, I've got a call already holding here, and I want to bring him on. Dan, can you hear me?
I can. Thank you.
Thank you. Welcome to the show. You know what? I brought you on a little bit early because I want you to hear this clip, and we can talk about it together. Maybe you're going to agree with the folks on CNBC said. Maybe you won't. But let's go ahead and play that clip and then laugh at it. Go.
Well, we want to throw out this idea that, people have talked about over the past few years, but maybe it's finally time to realize we need to do it. Should we tear down abandoned homes, foreclosed homes, or even built homes by the home builders that, all the fixtures and the Wi-Fi or whatever, even the color, are just not going to be stylish by the time people actually want to buy them? Joe Livornia is Chief U.S. Economist at Deutsche Bank, CNBC contributor also, and, of course, Rick Santelli. Joe Livornia, what do you think?
I think it's a great idea, Aaron. I mean, the old Keynesian...
Yeah, I think it's a great idea. Tear houses down because, they might even have the wrong colors on the wall by the time the market comes back again. So that has been knocking around, Dan. That's some of the
That's right. People have plenty of places to live. They can afford it. What they really care about is the color of the paint on the wall.
Yeah, exactly. You can't fix that with a can and a brush. But it's the wizards of smart that have tried to come up with ways to limit the supply, and their solution is to plow these things down, tear them down. Now, if they're dilapidated, that might make sense, but they're not talking about dilapidated properties. Dan, you called for a different reason. Let's bring this back around again. Tell me what you called about.
Sure. So, Greg, first I just want to thank you for having me on. I'm a big fan of your show. I've caught you on all the different broadcasts on TV, and I particularly appreciate that you're very generous with your advice and insightful and kind of no BS, telling it kind of like it is. So thank you for giving me an opportunity to ask you some questions.
My pleasure.
I'm not a professional investor. I run my own business, but I've got a stockpile of cash, and it seems like, as an outsider, this is an ideal time to buy. Rates are low, and surprisingly even going lower. Housing prices in certain markets seem to be significantly suppressed, and there might be high inflation in the future, which might bode well to own real estate. So I'm based in California, in Silicon Valley, and I don't think this is a very good place to invest. The housing prices are still very high here. But it seems like there are other areas in the country, Florida, Arizona, Nevada, where you can actually buy property and have a positive cash flow as well as potential capital appreciation for the long term.
Right.
So I'm wondering how, as an outsider, let's say I pick Jacksonville as a potential market, the numbers look good from afar. How do I actually make sure that the property that I buy in that local market is a good kind of micro-geography if I can't actually fly out there and check out the real estate? Because you can, the macro numbers may look good, but at the micro level, I may buy a dog of a community.
Right, that's a really good question. It's funny you brought up Jacksonville because we do have somebody coming on later who's got what it's referred to as turnkey real estate investments, meaning they've got it all teed up. They've got a tenant already in place, and they're selling the units with positive cash flow, and they can prove it because they have a lease in place right now. Buying real estate without ever actually having visited the place is a little bit of a tricky business, and people are doing it. Don't get me wrong, but if you're, Jacksonville, any place in Florida, it's cold. It's not so cold where you are, but I'm in New York. It's worth a visit. Okay, I don't love the idea. Hop a plane. It's a $500 round trip with an overnight stay. Just drive by it. Take a look at it. It's probably, it's the risks that you mitigate by just eyeballing it yourself are enormous because you're right. You just can't be 100% sure. If you have somebody on the street that you really trust who can swear to you there's no high-tension cables in the backyard, there's no alligator swamp in the backyard, these are the kind of things that you need to make sure you avoid. No highway going through the backyard that creates a lot of noise will make it hard to get good tenants. So the first advice I'd give is being in New York, and most of my audience is in New York, it's hard to generate positive cash flow here on a standard single-family house investment also. Same problem in the Bay Area, Boston area, D.C. It's really easy to generate positive cash flow in Florida, Arizona, et cetera. So opening up people's eyes to the national marketplace is part of the mission here, to show them that there's migration patterns and demographic trends and job growth patterns that you can look at that forecast housing demand decades into the future. And that's the kind of thing that you want to do to pick a winner that's going to give you that capital appreciation.
Makes sense.
You're going to want to have boots on the ground. You're going to want to have a property management company that manages hundreds or more individual homes so that managing your portfolio is not going to break their back. But hop a plane, take a weekend in Jacksonville and go have some fun and eyeball the property to make shere you're getting something good.
Are there any web resources, websites that will give you kind of a macro view, maybe over time, of where the appreciation is occurring in cities? Because I've known, having grown up in Chicago and lived in some major cities, that there are these even pockets that may seem attractive might decline over time, and they become impoverished, and your property values actually may stagnate.
Yeah, it's a good question. Actually, there's no one
the hot areas.
There's no one website yet that exists for that. That's one of the things that we're building. My company is called Own America, and we're building resources into this space right now. But we haven't gotten to the point where we have it all in one place. What we do have is a training course on the website that shows you a variety of different websites you can go to. One place that'll show you migration trends. One place that'll show you job growth rankings. Another place that'll show you a comparison of rent versus buy. Because if it's cheaper to buy than it is to rent, that's a positive cash flow market because you can buy it and then rent it out for a profit. Another website that'll show you exposure to foreclosures, which is an indicator of short-term pain. And we're very big here about short-term pain, long-term gain. Show me a place where there's pain going on right now, but there are migration, demographic trends, job growth trends that forecast that when the dust all settles and when all this foreclosure pain is gone, the market's going to come roaring back, or forget roaring back. It's just going to come, marching back. That's what we want. And that's what cracks me up, Dan, about that clip from CNBC where the guy from Deutsche Bank, all right, a wizard of smart, no doubt, who's advocating tearing them down. All the economic value that has already been expended to build the property. Let me ask you this question. If they wanted to get rid of a house because it was an excess unit of supply, they want to bring supply down so as to be able to, stabilize home prices, could they sell it to you for half price?
I'd buy it in a heartbeat if the rents would support the expense structure.
Yeah. So the clip was going long, so I didn't play the whole clip. But what the Wizard of Smart from Deutsche Bank went on to say was that this is a good way to put people back to work. Tear down houses. He went on to say that, if you need to get people to work, have them dig a ditch and then have them fill the ditch back in again. Because creating a job is about putting somebody on payroll. I don't think he understands that creating a job is actually creating something that needs to be done and then paying somebody to do it, not just paying somebody to do something so that you can give them a paycheck every day. Those are not sustainable jobs. So his reasoning was more about creating jobs, tear down houses jobs. But the reality is, investors out there, small investors, there's a wave of small investors, both domestic and overseas, that recognize single-family homes as being a phenomenal investment, that if everybody just got the heck out of the way and let them buy those properties, if the government took away some of the restrictions that keep investors from buying investment properties, made financing available to them with good-sized down payments, but made it available, you'd see there'd be no oversupply of foreclosures. They're getting gobbled up as fast as they can put them on the market. So they have to trust in the free market. They have to trust in guys like you, who you said something in the beginning of the call that, you have a stockpile of cash. If you only got your information by watching TV in the last couple of years, you'd think that nobody has a stockpile of cash. Everybody in California is underwater on their house. Everybody in California is maxed out on their credit cards. Everybody in California is living hand to mouth and is afraid to lose their job. And yet here's Dan, who's actually got a stockpile of cash.
So actually, Greg, along those lines, are there creative ways that people can use their IRA and their retirement accounts to actually buy property?
Yeah, you can use your IRA. Very well-kept secret. It's called a self-directed IRA. And there's a company called Equity Trust. You can go to equitytrust.com and check them out. They're the leader. There's others, but they're the market leader out there. You can use your IRA to buy real estate. There are restrictions and rules that you have to stay within, but your financial planner will either not tell you about that or will tell you can't do it because either he or she doesn't know you can, or he or she doesn't want to see you pull a couple $100,000 out of your IRA and go move it over to a custodian who can do the self-directed. This is the best kept secret because you can take $100,000 in an IRA, buy a single family home with cash, generate 12, 13% returns just on the rent, and then the wild card is the appreciation. And it works. And because it's an IRA, you already have a long-term mindset. So you're willing to wait.
Are you restricted to the same only being able to own 10 homes if you're using an IRA? Or
the rule you're referring to, Dan, is owning 10 homes. You can't finance more than 10 homes if you're using Fannie Mae or Freddie Mac financing. You can buy as many houses as you want. As far as I checked, it's still a free country. Yeah. If you can pay cash for them, you can buy as many as you want. But if you want Fannie Mae or Freddie Mac-backed financing, you're limited to 10, which is actually a great example of one of the stupid regulations that remains from a point in history when it made sense. Experienced investors who own 10 homes can't buy an 11th and get a mortgage for it.
That is ridiculous. Those are probably the least risky people to bankroll.
That's the idea. That's the idea.
That's more risky.
So when you hear the government is coming out with solutions, we talked on the last show about, and you can go to ownamerica.com and go to the archives and see the last show where I talked about how the federal government's interventions show no faith in the private sector at solving this problem, and that's what we have to try to get across to them. I'm involved in a lobbying effort right now to try to explain that guys like you, people that are listening on this show, they can pick off individual properties, take off that dreaded shadow inventory, burn it off, create housing stock for renters, and stabilize the housing market. Dan, investors are going to solve the housing crisis if everybody gets out of the way and lets us do it.
Greg, I'm curious, what geographies would you recommend for people that are looking for both short-term positive cash flow and long-term capital gains on appreciation?
Yeah, I'll rattle off 5 cities that I like a lot. I like Tampa and Jacksonville in Florida because they're both port cities. As we talk about here a lot, and we'll talk about a little bit later on, the expansion of the Panama Canal is turning on more job growth in the southeast U.S. port cities. I like Savannah, Georgia. I like Charleston, South Carolina for the same reasons. I like Atlanta and Charlotte. I like Phoenix. And there's a lot of other places I like also. But in terms of the ones that have gotten hit hard by foreclosures but also have unmistakable migration patterns heading their way, those are some of the good ones.
Very good.
Thank you. Dan, thank you so much for the call. That was great. You're listening to Randon Real Estate on 77 WABC and WABCRadio.com. When we get back, we're going to get on the air with America's #1 real estate entrepreneur, so stay with us.